Good morning, everyone. Going to give it a couple of seconds while everyone comes in. Good morning to you, Lori. How are you?
Hello, Lauren, and how are you today?
I'm doing good, doing good.
Are you ready for a special Ask Lori?
I am. You always have some surprises, so I'm looking
I've
forward
got
to today's show.
lots today. I have lots. We're going to go over how you can end up more tired and more broke.
Oh, well, there it is. The life of an entrepreneur, right?
Like my famous saying, I'm like always, you don't want to be more tired and more broke. We're going to go over how that can happen.
I am going to, I think we're going to go ahead and start the intro, and then you can dive into today's topic.
Yep, sounds good. Let's make it happen.
I always look forward to the Ask Lori sessions. I never know what you're going to throw our way, so.
I got a lot coming today, so guys, be ready.
Ready or not, right?
Yep.
All righty, let's see. There we go. Okay, and good morning again to everyone who's joined us. Thank you to our frequent flyers who always come and enjoy the show with us, as well as to those of you who are new. We welcome you to Small Biz Talk, Solutions for Your Small Business. My name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations throughout the country. Offering no cost, I was going to say low cost, but it's no cost services for your small businesses. For the Los Angeles network, which is a network that I represent, we have locations in the Los Angeles, Santa Barbara, and Ventura counties. And you can see those represented on the map in front of you. Now, I mentioned those no-cost services. Those services include business advising, and so you're able to sit one-on-one with one of our business experts, i.e., or for example, the guru of all numbers, Miss Lori Williams, who's with us today, as well as experts in marketing and taxes and business planning, licenses, permitting, you name it, we've got resources for you. We also offer virtual trainings on such topics as what you've joined today. All right, now again, we are here to help. You can contact us at 866-588-7232, or you can go to smallbizla.org/new client. For those of you who have joined us outside of the Los Angeles area, you can go to americassbdc.org/find your SBDC. I know that was a quick intro. Most of you are always with us. So if there are any questions to those of you who are new to our program, please enter those into the Q&A. Actually, let's make sure we put all questions into the Q&A. Lori will be taking a look at the chat, and we'll be sure to provide resources in the chat. So links to previous shows will be in there, as well as any tidbits that Lori would like to share with you. So with that, Lori, I think we can get started. Kicking it back to you.
Okay, awesome. Well, first of all, I'm going to say that we put into a chat a special, I guess you could say, a little bit of information that you could just copy and paste and send to anybody else that you think would enjoy this show. So this is my way of marketing out to say, hey, bring a friend, email this. You don't have to be an SBDC client, although it's great to be for all the reasons Lauren stated, but you don't have to be in order to watch this show. So I'm asking anybody who knows somebody that might benefit from the show. We'd love to grow the audience even more. I wrote some copy that you can either just send them the link, or you can cut and paste just as we had done there. I'm going to go over some beginning stuff pretty quick because I want to get into today's show. So first of all, as an update, California regarding taxation of PPP loans. I mentioned this last week. I just want to mention this one more week, and then I'm going to drop this from our list. But it basically, what's happening now is California law has extended the federal payment paycheck protection program to match what the federal had as in regards to it not being taxable income. So I'll just go over that slightly. If anybody has any questions, let me know. Upcoming classes that I'm teaching, Lauren will put all the links into the website, or to the website, into the chat. The finance literacy classes have become very popular. This is a whole hour. The first one going over accounting requirements, and the second one going very into detail on financial management of your company. Also, July 7th, I had my sales tax seminar, and they'll be coming up again. I think my dates are old, so the links are going to give you the new dates. And July 22nd, the presenter is Andrew Cohen. There's going to be a special presentation at the Pasadena SBDC, and he's going to be talking about the business planning process. He is also going to be our guest speaker for next week. He, in addition to being an advisor at the Pasadena SBDC, he is also a CEO of Work Better Now, and he's going to tell you about his company. Okay, that was just a quick review of some of the stuff I usually do because I wanted to have plenty of time to go over the things we're going to discuss today. First of all, Lauren, are you ready for this? We are going to start out with a special treat. So let me share my screen. Many of you have said to me, do you really, Lauren, get ready to laugh, ready? Do you really push your cat in a stroller? So I have had, believe it or not, Lauren, I have had requests to see a picture of Babu in the stroller. So, hey, you know, I'm going to talk about finance all this time. We're going to start out with something to laugh at. Can you see that, Lauren? Okay, that is Babu in the stroller. We are going through the woods on the mountain bike trail. So you can see, yes, I do push my cat in a stroller. And there's more. So then Babu went through the museum. I said, I'll pay for the kid price if I need to. And they were kind enough to let her go through the museum, which she's been through several museums now. But wait, there's more. She goes in her backpack, and this is us hiking to the waterfalls. She has a little pop-up tent I carry, so we have a lunch. And for the final drum roll, yes, she rides my bike with me. So that is Babu, and she goes everywhere with me. And now you guys, whenever I say, hey, I happen to be pushing my cat in a stroller or what have you, I didn't make that up, okay? So I thought Lauren, I can see you just laughing hysterically. Isn't that cute, guys? I've got the Adventure Kitty Deluxe, okay?
Lori,
So
that
now,
is the sweetest thing I have seen.
I know people are always coming up to me and going, is that a cat? Is that a cat? Is that a cat? I'm like, yes, it's a cat. Yes, it's a cat. Yes, it's a cat. Yes. She goes everywhere with me. Okay, so now that we have had some fun and some laughs, let's get started here, guys. We're going to learn some things today, and bear with me because I'm going to be clicking all around on different things to try to teach you this live. So bear with me as I switch screens. And also, please, I got the chat up. I know you guys love to write in the chat. So I've got the chat up. I'm watching it. Pay attention to what I'm saying. Ask questions as we go. We're going to learn some cool stuff. So we're going to work mostly with the screen. I'm going to show you what I'm doing and explain what we're talking about today. So first of all, let's go over what I have created here. So let's start just over here at the top. All I'm doing is a demonstration. That's what this is. This purpose today is not something I'm using for internal management or analysis. I am doing this to demonstrate some facts and concepts to you today. So that's the purpose, okay? So in this, I don't care what the widgets are we're selling. It could be a service, it could be whatever. I'm not even making up a company. I'm just using numbers to demonstrate. But in my example, the selling price of one unit is $15 and the cost of one unit is $8. I could be making chairs, it could be wood and glue and nails like I always come on. It could be a million of different things, right? But the cost to produce whatever it is $8 and the selling price is $15. Now, you've got a little arrow here. What I'm saying to you guys is notice I used one unit and one unit. You have to match the quantity, the one unit of the selling price to the quantity, one unit of the cost, okay? Then I calculated gross profit. All I did was say 15, the selling price, minus the cost equals gross profit, 7. Then I calculated the gross profit margin. All I did was take 7 divided by 15 and multiplied it by a percentage. So let's go on this tab real quick. Hold on, let me click on another tab. So I've got the same diagram here. I just want to go over the calculation for a second. So I just want to come here for a second for the calculation. So for the gross profit, revenue minus cost of goods equals gross profit. Okay, revenue minus cost of goods equals gross profit. For the gross profit margin, it's revenue minus cost of goods, which is the gross profit, divided by revenue times 100% to make it a percentage, okay? So this is the same thing I was showing you a minute ago. I just clicked here so I could write out the formulas so everybody's clear on how I got it. Okay, everybody good? We're gonna go back to here with my numbers. Now, what I'm doing is, first of all, I'm going to take these numbers out. So we got no numbers in here. What I have set up, let's look at here at the no, let's go here first. Sorry, guys. Let's go here first. Okay, let's look at what I did. I created basically an income statement. These are my category headings. I said, this is the revenue. This is the cost of goods. This is the gross profit margin. Exactly like I have up here. Didn't change anything, same thing, okay? Then I have my overhead expenses, and I just chose a few overhead expenses: rent, internet, insurance. The list isn't complete, guys. I just chose a few just to demonstrate. So it's not a complete list. It's just to give you an idea. Then I added up my total expenses, all these expenses here. And then I calculated my net income, which my net income, I can either say gross profit minus expenses equals net income, or I could go revenue minus cost of goods minus expenses equals net income. So that's the structure we're working with, okay? That's the structure in category nomenclature. Everybody good? Okay. Now, I've got certain assumptions on my expenses here that I just recorded to the side here. So I said I'm going to have an administrative assistant. This could be customer service, whatever. I'm just using a term to say I've got somebody that I need to have help me in the business. I'm paying that person $17 per hour, and I've calculated the number of hours 8, so it's $136 for the month. That's where that came from. I am paying a distributor to sell my product, and the rules that the distributor has, I changed this a little bit, it's $100 minimum. So whether I distribute one product or whatever, it's 100 minimum I must pay them, plus 10% of every sale I make. So therefore, every time they sell a product, I have to pay 10% of that sale. So that's going to go up with sales. And then my professional services includes legal, accounting, and tax. So that's just what I mean by that, okay? So everybody good? Thumbs up in the chat can tell me, yep, I get what you said so far. I just laid out the foundation, nothing confusing, we're good. Excellent, okay. So the first thing that you want to see is that I have zero revenue. I'm acting as if I did not sell anything yet. I did not sell anything. That's why no quantity sold. It's yellow. I didn't put a number in, no revenue. It's saying negative 736 because my total expenses are 736. So it's like saying I have $736 per month in bills and I didn't bring in any money. What am I going to be? I'm going to be negative 736. Okay. So that's what this is showing with no sales in. So this is what we're going to learn. The first thing I want to know is how many widgets, and I'm just using the word widget because I'm being very generic in the business model here. I just want to explain the financial concept. How many widgets must I sell to reach $1 net profit? And keep in mind, so let's now start focusing on this. If I want to know how much I made, okay, how much money I made, it's the net income. Okay, I hear a lot of people, I ask them, they go, well, I made, and they give the revenue. No, that's not how much money you made. The correct terminology is the company's revenue is, or the company's income, or the company sold this much. That's not how much you make. You make how much is left over after you pay for the cost of goods and all your expenses. That's how much you make. That's the amount you make. So that's going to focus. So if I have zero revenue, I have all these expenses, I made zero, or negative $736. I lost $736. Okay, we're good on that, right? So the first thing I want to know is how many widgets must I sell to reach a $1 net profit? So what I'm saying is if I sell a widget at $15 and it costs me to produce the same amount at $8, how many do I need to sell to be at $1? Well, what if I sold 135 widgets in a month? So if I sold 135 widgets, how much is my cost of goods? It has to be the exact same amount, because if I sold 135 widgets, I would have had to have produced 135 widgets, okay? So this number and this number has to match. If I'm selling 135 widgets, I got to have 135 widgets produced in order to sell them, right? So this number is just simply 135 widgets times $15, the selling price, 135 widgets times $8, the cost, and there's the cost amount, okay? Then I am subtracting to get the gross profit. I can see it's at a 47% gross profit margin. Here's my expenses, and I made for the month, because this is per month, $7. Okay, everybody good on that? Now, what I'm first going to show you is how gross profit will affect the overall quantity that you have to sell in order to make the amount of profit that we made here. So let's take, for an example, inflation. Anybody familiar with inflation right now? Cost going up. It's not just happening at the grocery store and the gas station. It's happening for you when you go to make one of your products, one of your widgets, right? So say that it ends up costing me $1 more to produce my widget, whatever my widget is. So it cost me 8, it's going to now cost me 9. Now, typically in a small business, when something like that happens, they pay the additional $1 and they just keep their head down and they keep working, right? In a company that is more financially managed, they pass that price on to the consumer. You notice that even products that you bought yesterday, suddenly if inflation goes up in the news, the next day it costs you more money, right? We see that all the time. They're quick to increase their price. Small companies don't increase their selling price, and therefore they start eating away at already thin profit margins. Let me demonstrate. So for everybody, let's see if you're paying attention. How many widgets right now do we have to sell to make $7? How many widgets do we have to sell to make $7? How many? We've got to sell 135 widgets to make $7. Okay, everybody see that? 135 widgets to make $7. Got it? So if I change the cost by $1, how many widgets will we have to now sell? So let's do it. Let's find out. I changed the cost by $1. It's now $9 to produce the widget. I did these numbers ahead of time, but all I'm doing is literally just putting in new numbers and see when I get back to 7. Is 145 going to do it? No. 155 going to do it? No. 165 going to do it? Yes. So you see that I have to suddenly sell 30 more widgets a month just to be where I was before. Okay, everybody get that? So that increase in cost created a scenario where I have to sell 30 more widgets just to be profitable of $7. Remember, I'm not even getting paid nothing that is worth any of my time, $7, right? Now, when I was selling at $8 a cost, when I was selling my products and it'll cost me only $8 to produce, my gross profit margin was 47. Let's go back there for a second just to look at this. Let's go back to 135. Let's go back to $8. Okay, we're going to go nice and slow. So we're back where we were a minute ago. We have $8 cost. We got $7. We've got 47% gross profit margin. When my cost to produce went up to $9, I am at 40% gross profit margin now. At 40% gross profit margin, it's going to take me 165 widgets to get the same amount of money I had before. So you can see that a decrease by 7% in the gross profit margin is going to cause me to have to sell 30 more widgets, okay? Now, when we look at this, if I have to sell 30 more widgets, say I had to then increase my marketing to do so. So it's not like these things are static, they're dynamic. One thing affects another thing, affects another thing. So say that I have to increase my marketing by $50 in order to sell the 30 more widgets, right? Well, now how many widgets do I need to sell to get back to my $7, over about 175 or more? So what I'm showing you is that the change in the cost to produce is changing the dynamic in the gross profit margin, the calculation, which then changes the quantity I have to sell in order to get back to where I was, which then changes possibly the amount I have to invest in marketing to sell that additional amount, which then requires me to even sell more products. Okay, I know that your head's probably spinning by these ifs. What I'd like to express to you right now is what I just demonstrated in this little Excel model, just a quick copy of a model to show you something, is happening within companies, whether you're using something to be able to say these exact numbers as I just had, or you're not. It's just you are looking at your bank account and seeing your bank account go lower, which I always tell you is not an indication of how your company's performing. And you, on a gut cellular level, you know something's just not right. Something's not working well. When you are able to put it into an Excel document and look at it and do a scenario planning like I'm doing right now, you will have a better understanding of what's happening within the company and better control in your decision making. Okay, so what we have learned so far, other than just how we can look at our company, you know, in this way I've laid out the format, but what we've learned is when the cost goes up, the gross profit goes down, the quantity we have to sell to make the same amount will increase, which may increase the overhead, especially the marketing, in order to produce or sell that amount. Now, what we want to know next is what is our ideal net profit? You know, how much do I want to make? You know, $2, that's obviously not going to, you know, make enough money. And all these numbers are very small and made up. So don't look at this like real numbers in a way. I don't like using big numbers when I teach. So I just kind of made these numbers up. So say that I want to make somewhere about 2,000 a month. So let's try 630 as a quantity. So yeah, so if I sell 630 at $9 cost, I will have a net income of 2,049. Okay. So now we have that as a benchmark. Say I need to at least sell 630 per month in order to make the net income that I want. Okay. What I have to do is I have to, all in addition to knowing that I have to sell 630, I could have a sales log that says, how close am I to the 630? How close am I to the 630? Am I selling 630? But I have to have a consciousness that the minute any of the inputs here changes, I have to reassess the quantity I have to sell. Like, for example, say I do a discount and I reduce the selling price of my widget because I want to sell more. I see that happen a lot where entrepreneurs have a gut response. Sales are down, so they reduce the selling price. And I go, no, you don't want to do that because you're going to have to sell a lot more to get where you were. Watch what happens when I reduce the selling price by $1. If I go $14, it's going to reduce that to 1,482. Let me go back. I was selling it at $15. I'm meeting my 2,000. I reduce it to $14. I'm nowhere near to my 2,000. I don't even know what the number is. I'm just inserting one to see, about 850. I got to sell that many more units. So what happens is people say, well, I reduced it. Well, then you have to look at it. What quantity of widgets do you have to sell in order to be where you were before? Okay. So when I reduced it by $1, I went from 630 units to 850 units that I must sell. So somebody can walk away and say, well, that reduction by the 15 to 14 did allow the marketplace to purchase 850. So in other words, more people bought it at $14 than they were buying it at 15. However, then I must understand right here what I'm talking about, which is capacity and asset utilization. So let's talk about that. If I was to sell 850 widgets, perhaps I can't just have the admin for 8 hours. I might need to increase the admin to 12 hours. When I increase the admin to 12 hours, what's going to happen is the cost for the admin is going to go up. I may also have to pay some other additional expenses just because of the fact that I'm having to sell more. Maybe I find that I need 2 admin to sell that quantity I must sell, and it goes up quite a bit. You can see how that is affecting net income. So what I'm saying is it's just like homeostasis. I use that term for business a lot, just like the biology and the human being has all things functioning together. You know, they always say we are one, our mind, our body, you know, everything's in effect, everything must be aligned. You have this bad, you have the stress and it affects your body and how you physically feel. We can relate to that. I want you to think about this example as being homeostasis for a business model. There is a certain Rubik's Cube, I always refer to it, where you have the right selling price dependent on what the market will pay. You have the right cost, giving you the gross profit that you need to cover your expenses and allowing the capacity in order for you to be able to produce and sell those amount of widgets. As you can see in my quick example, by lowering the selling price, I'm now at a 36% gross profit margin. At a 36% gross margin, I have to sell at least 850 widgets, which once again is going to mean that I may have to pay somebody more money. So if there is one takeaway from what I've demonstrated with this model, is a deeper understanding of how one decision and one situation affects another decision, affects another situation, affects another situation. And so you can't make these decisions, such as reducing the price if the cost goes up, without looking at the financial picture. Too many people make decisions based on competitors. Well, my competitor reduced the price, so I'm going to reduce the price. My competitor charges this, so I'm going to charge this. You can't make sales and marketing and hiring decisions in a funnel. You have to make them within looking at all of the cost, all of the inputs. Now, what I will see sometimes, and let me go back to my $15 that I started with, my $8, back to my 47, okay? I'm going to go back to my 630 to make 2000, okay? What I will see often when I look at people's numbers is they have certain expenses that they have to pay on a minimum basis no matter what. So say they have a brick and mortar, they have to at least pay 100, or say they have storage, they have to at least pay 100. Internet is at least 25, so there's these minimums that they have to spend no matter what, right? And so I'll see them doing something like maybe selling 450 units. And what I tell them is that you have an underutilization of your assets. You have the capacity to actually sell 630, okay? But you're only selling 450. And in many cases, that may not make you profitable. So in some cases, when you are not being successful financially, you may have to increase the marketing, which is going to reduce your net income. But if you use the marketing correctly and you actually are able to increase the sales accordingly, you will be able to more fully utilize those resources, and that's full capacity. Your asset is being utilized. I would tell people you built a Ferrari because you have to, like you have certain expenses because of overhead, just the way your business model is. This is true of restaurants and brick and mortar, that you then have to make sure that you sell a certain minimum just to get to where you need to be to make any money. So you have to understand that you have to have the capacity to produce the number of widgets you must sell to reach your financial targets. And if you have a certain level of expenses, you have to make sure you fully utilize the assets by selling enough units to use the assets appropriately. Okay, so what we've looked at here is how the gross profit affects the selling price, the cost of the units, and the amount that you make. Now, I want to try to see if my pen will work properly here. I want to draw something to show something else in this demonstration. Now, this is something I see a lot of confusion among small businesses, and they use this variable versus variable cost concept. And this variable cost concept is not an effective financial concept within our business models today. Now, let me explain what I mean. A lot of times people will say, well, what's my break even in this? And they use these concepts. That concept was created more when we were manufacturers and we had huge expenses in assets. Let me break that down and explain. So say I had a production facility. I have to get the plant. I have to get this big, assembly built. I got this big production facility. I have to pay a certain amount to get this assembly belt going. It's going to cost me until I have it running at full capacity. This is coming back to this full capacity thing. So if the conveyor belt is capable of making 100 widgets per hour per day, doesn't matter in this explanation, and I'm making only 50 widgets, I'm underutilizing my capacity. If I can get that conveyor belt to make its full capacity, we can say that my 101th unit is less expensive because I'm already paying for the conveyor belt. Okay, that's where the variable cost and all of this comes into play, because it says, okay, then it's just the price of making one more widget. Now, this does not describe 99% of our businesses today, because what we are doing is, even if we are saying we are making the product, we are outsourcing, especially in the small businesses. So you notice how the cost of goods is got the same quantity here. If I sell this many, I got to have the same amount I produce. Most businesses, this amount that they are producing is being purchased or outsourced. So every time they increase the sale, it has a alignment where the cost incrementally increases the same amount. So if my pen works, what I'm doing is I'm going to draw, this is the sales going up. Well, what's happening is the cost of goods is going up at the same amount, right? And right here is representing the gross profit margin, right? So right here in this case is the 47%. That's the 47%. And when you sell an additional amount, you have an additional cost. So this is not changing. This is not changing at all. The amount of profit left over is going to just keep going up, and it's going to go up at the same amount of the sales. And so where you're going to eke out some additional money when you are growing is by the expenses. But then people think of the expenses going like this, and they go, oh, look, here, this much is my profit. It's increasing. But as you increase the sales, this is the sales, the cost aligns exactly, but the expenses goes up. You notice how I said that the marketing or the admin. So what happens is it really does this. It goes up by this. So it's going up by a little, but it's this distance here is where you're becoming profitable, right? So if you are not making money and you try to keep selling yourself out of growth, like say, for example, let's do this, let's say 82. I'm not making money. I'm losing $807, right? So I say, well, what I'm going to do is all I got to do is I got to sell more. Well, if my cost structure is out of whack because my gross profit is just not enough, this is going to increase. My cost to produce is going to increase. My internal cost for expenses will increase just because I have to produce and sell more widgets. So I'm really not going to end up being that much more profitable. I'm just going to be more tired and more broke. So that's what I mean by that. So it's extremely important to look at your cost structure. And I do go into detail on the cost structure in Financial Literacy 101 Session 2. But what I'm saying to you is ultimately, this is your cost structure. You have to know how many widgets do you have to produce to be a dollar profit? How many widgets do you have to produce to meet a benchmark of how much you want to make? What happens when you change the selling price? What happens when you change the cost and the inputs? And how much is it that you are making? So in my discussion, we went through all of these different aspects. Let's see. If I own a trucking company, do I calculate how much the cost of fuel, insurance, tolls, etc. in the Cogs, or is that supposed to only be in the expense forecast assumptions? What's the difference between Cogs and expense forecast? Excellent question. So when we look at the cost of goods, they are those costs that are directly related to the production of goods and services. So in a chair, it is the wood, it is the glue, it is the nails. Expenses are those costs to run the business on a daily basis. So when we look at a trucking company, insurance, I don't know what the ELD is, but the tolls, all of those go under expenses. Those are not things that incrementally increase as you sell another widget, okay? So those would be in the expenses. You really want to keep the cost of goods only those things that are directly related to the production of your goods or services, okay? Let's see, email for getting a meeting. Lauren, can you go ahead and put your email address in the chat? If you want to reach out to me to have a meeting with me to go over this, you will email Lauren and then I will get back in touch with you on that. Okay, is the units considered the product you're selling? Yes, what I'm doing is I'm saying units, I'm saying it doesn't matter exactly what you're selling in this case. I'm just saying the number of units. So if you're a trucking company, it could be however, you know, how many clients or what have you. But yes, that's what I'm doing is I'm saying the number of units. Okay, guys, so I am going to go into another topic unless you guys have any questions. So do you have any questions on what I went over? Is this helpful? Are you kind of getting what I'm saying? Like I said, in summary, the takeaway is I just tried to create something to visually show you how changing an input will change the amount you make. What you want to do, now I know people are asking for the template. This is just made up numbers. It's better if you actually create it. So all you do, and you can watch this video a million times, is you write down what is the selling price of one unit, what is the cost of one unit, what is the gross profit, what is the gross profit margins. You just create that, and all this is numbers, guys. There's nothing fancy about this at all. So please, if you need help creating this, but I would rather you create it with your own numbers than my made up numbers, because it's really just going to confuse you. It is better if you do this for yourself. When I do one-on-ones with people, I am always going through this and demonstrating basically why their company's not working. They go, well, we're not making money, I don't know why. And then I put this information in this document or something similar to it and say, well, this is why you're not making money. So there isn't really, I hate to take the mystery away from you, but there's not a lot of mystery in why a company succeeds or not. Yes, there's mystery in consumer demand and why people buy and why people don't, and the marketing and how to reach your audience. That's where I think the mystery is. Financially, things become really close to black and white. They have a lot of scenarios. Well, what if I do this? What if I do that? What if I do this? So that's where it becomes mysterious as to which scenario may work best to help the company to succeed. And that's why I like using something like this, because I can say, well, if my cost, let's just demonstrate one more time, if my cost goes up to 9, and I was back at the 630 widgets to get the 2,000, how much would I have to increase the selling price to get back to where I was? Well, about $16. So you can see, you can play with that. And then you will make a secondary question that would be, can we in the marketplace sell it for $16? So what I just demonstrated in my speaking of my mind out loud, or speaking my thinking out loud, is I will approach every single financial question by identifying what the placement has to be, what the parameters, that's the word I was looking for, the parameters. So if I go, okay, the cost of the unit went up to 9, what would we have to increase the selling price to? Can we increase that selling price? Well, no, maybe, but can we do it for $15.50? I don't know if I allowed, yeah, I did allow some numbers in. I usually just use 2 numbers, not decimal points. Can we increase it to $15.75? What would happen if we increased it to $15.25? What would happen if we reduce this? What would happen if we increase this? What would happen if we do that? So what you're doing is you're identifying the financials of the problem. Then you're looking at different scenarios that would resolve the problem. Like, for example, before I ask, will the market pay $16? I will put a number in to understand what my parameter is. So what would it have to be? So once it tells me, and I can do this on the back of a piece of paper, I just like Excel because you can see I can move the numbers real quick. It'll tell me and say, well, you'd have to do it at $16. And then I'll go back and ask, well, will $16 suffice? So what I'm doing is I'm kind of, asking a question financially, figuring out what the financial parameter is. Then I go and I look at the marketplace and I see if it'll align with the market. Then I might come back and go, can we do enough marketing to sell it at $16, right? And I might have somebody in the marketing department or me, make it up, whatever, but you can see where I'm going and say, well, we could run an ad, but that ad's going to cost us this much more. So the marketing is going to go up to 550. Well, where's that going to put me financially? Can I afford 550 or can I not? So really what I'm demonstrating, and hopefully is the takeaway, is a total new way of looking at your company financially and seeing that there is something beyond just the questions that small businesses are always asking. Should I use QuickBooks? How should I do my accounting? What should I fill out on my tax? All these things are real important, but I would like to bring a new thought to the table, and that is to befriend the numbers and understand that there is extremely simple ways to look at them, and they will tell you so much, and you can use the numbers to predict what will happen. So I always say every hiring decision, every marketing decision, every sales decision, every single thing that you create financially must be now analyzed first. Like I had a situation with a client that did not have any internal analysis whatsoever, and they had been successful at selling their product, their widgets, right? They sold their widgets on their own website. So with their widgets being sold on the website, they had basically a retail selling price, right? So they decided to get a distributor and sell it wholesale, which is a lot less than the selling price. They did not plug in any of this information. When they first started selling through the distributor, it didn't show up financially as the issue they were going to have down the road, because they were still selling so much at the retail. The retail was giving them a higher profit margin, right? But when they started selling at the wholesale, basically if it was more like a $14 when you looked at $16 for retail, $13 for wholesale, it was $14. They're starting to lose money. The more the distributor sold their product, the more money they lost. And they didn't realize it until they were at a big loss and they couldn't figure out why. I could have done the math ahead of time. In fact, there's a company I'm working with now that said, I'm going to be selling at a distributor. I said, before you do, let's do the math, because you're going to pay distribution fees. You're going to reduce it to a wholesale price. You have to see how many units do you have to sell to be back to where you were when you were selling retail? And then how many units would you have to sell to be where you want to be profitable? And then what is the capacity? What is the expenses? How much more are we going to have to add in hiring people? How much more are we going to have to add in many different aspects of that, right? So you have to map all these things out financially before you come to any great conclusions on it. And as far as questions on scrap and everything, if you have a certain amount of scrap that comes in every single time, you can include that in your cost of goods calculation. Remember, what we're doing here, I want to come back and state this, is that we are doing what is called managerial accounting. We're not doing financial accounting. Financial accounting is following very strict rules to complete your tax returns, to create financial statements for the bank. That's your, a QuickBooks and your accounting. We're doing internal management. So we can look at things and include the numbers as we want to make a proper analysis. So if I say, well, I've got to pay for the scrap no matter what, I'm going to include it in my cost of the unit in this analysis, because I don't want to have that cost not be recognized, then you can. Because at the end of the day, what you really need to do is make sure that you're making money. That's really what matters, okay? And at the end of the time, you need to figure out all your costs that are included. Okay, let's see. We got a question. Do you recommend trying to have a dedicated business bank account? Helps people to catch your business expenses. They can download their info to help categorize expenses. I do definitely recommend having a separate bank account, even if you're a sole prop, which you don't have to by definition as your sole prop. But I do suggest you do have a separate business account. I am not a proponent of syncing QuickBooks with the bank account, because in many cases it just ends up causing more problems than it's worth. But that's a whole discussion from here on. So I'm not going to get back into that during this call. But yes, I do recommend having a separate business bank account. How do you know what your capacity is? Good question. On a capacity, what you're doing is, it's not as complicated as you think. So if we go into our mind's eye, I always say, well, in this one, I'm going to say something strange, but this is what I tell people. You want to do a Einstein thought experiment. Now, you might be saying, what are you talking about, Lori? Now we're talking about Einstein thought experiments. We're talking about finance for a minute. Now, where are you going with this? I use this analogy a lot. So when Einstein created his law of relativity, as Lori likes to explain, he was basically sitting on a couch with his feet up, drinking a Starbucks latte, right? But he actually coined the phrase, or somebody coined it for him. You can correct me on this, but it's a thought experiment. He went in his mind's eye and he imagined what it would be like to ride a light beam, right? He imagined what it'd be like to ride a light beam. Now, what I'm asking you to do is imagine the inner workings of your company. And I say, if Einstein can imagine riding a light beam, I know you can do this. So when we think about capacity, let's go back to my widget and my admin. I've got my admin just now in my latest example of having 24 hours a month. So I'm going to do a thought experiment. I'm going to close my eyes and I'm going to picture my widget, whatever my widget is. And I'm going to say, okay, we got to sell, in my case here, 630 widgets in a month. So I picture 630. I might say, well, what is 630 by a day? Because it's easier to do a thought experiment if you can look at it per day. So I'm just going to say 30 days. So it's 21 a day. So I'm going to picture 21 days, 21 widgets a day have to be sold. I'm going to picture what are the activities engaged in that? Let me see. I got to, package it. I got to put a label on. Well, how many can be done per hour? How many people will I need? Do I have enough storage to store that many widgets? So you see, capacity is something that becomes self-evident historically. Let me explain what I mean. If I have a closet and I can only stuff so many things in, or I guess a suitcase, you know how you're stuffing things in a suitcase? You lay out all your clothes on the bed and you think it's going to work. And then when you go to stuff in a suitcase, you realize it's not. Capacity becomes self-evident when it's historical data. What you have to do is you have to picture the suitcase, picture the clothes going in it, and picture about when it would be full. Well, that's what I'm saying with this thought experiment. You have to spend time looking at your capacity, which is right here is your capacity. This is your ability to produce your widgets, because you're usually buying this from a distributor. So you have, an admin doing calls to the distributor, etc. So you have to look at your ability internally to produce. When I say produce, to sell, to manage, customer service, run the business, that's your capacity. I can't have these numbers and turn around and do 5,000 widgets. I can't, it's a given. I can't. Look, I make 16,000 a month. Oh, that'd be awesome. I have people do that a lot, by the way. They say, well, we're going to estimate sales at 5,000 and we're going to make $16,642 a month. Well, I can look at it and I can tell immediately that they don't have an alignment. They don't have the capacity to produce 5,000. In fact, that's when I realize and know, when I look at people's financials and I see that they're doing incorrect financial estimating because they're not aligning. And it tells me because of the percentages, their cost structure's off. I can tell this immediately. As having been a banker, you can look at people's forecast and you can tell when it's just crazy talk. So capacity is a very important aspect to understand. You have capacity. Do I have the capacity to produce this? And then if you have the capacity to produce 5,000 and you're only selling 2,000, you have underutilization. So when you think about it, when people have underutilization of their assets because they're not selling enough, they do layoffs. They move to smaller offices. When they don't have the capacity to produce as many as they can sell, they go into larger offices and they hire. But what happens is that's why the sales, like I said, the sales go up, but the expenses go up, but not as even as the cost goes up. So when you look over here, I've got the sales going up here. I'm over here, guys. The sales goes up. The cost of goods aligns pretty, evenly with it. And the expenses are the sporadic where they go up and then you hit a plateau where you're able to produce that much. Then you have to hire more people. Then you hit a plateau. Then you have to hire more people. So that's basically how a company is able to successfully grow. It has a good structural foundation from the very beginning. It's makes, if you can't make money at a certain quantity, just selling more is not going to solve it. That's the main takeaway. If you are not successful at a certain quantity of sales, just selling more than likely is not the answer. And in fact, that is the biggest takeaway of this completely, is saying to you, too many people are not profitable and they think they can sell themselves out of the problem, but you can't, because you have to understand the whole cost structure. You have to understand how all of this works in relationship to each other. And it doesn't matter if you just have it as a crayon and a piece of paper, or you put it in Excel like I did. There's no calculations here that's complicated, guys. This is a data point. This is a data point. This is just subtracting the two numbers. This is just dividing and multiplying to get a percentage. This is a data point. This is just the number of units times the selling price. This is just the number of units times the cost. These are just data points, okay? This is just adding these up, and this is simply subtracting the revenue minus the cost of goods minus the expenses. There is absolutely nothing complicated of what I did here, nothing at all. I just then put a quantity sold in an Excel formula so I could change the quantity and I could demonstrate. So hopefully you guys got something out of this. If you want to meet me and have a direct conversation, once again, Lauren's got her email address in there. I really, really suggest everybody watch this video again and again. Make this simple structure, what I drew in the circle. Make this for your company. Now, if you sell a bunch of units and everything and you don't know, just take an average. Just take an average of what it is. Just create this enough to play with it and have fun with it and start to look at the numbers. Even if you create it and you don't know if you did it completely correct, the act of producing what I just created here, the act of putting in some different numbers and seeing the results, you will come away with a greater understanding than you have today, and it will help you going forward. So Lauren, as an observer, give me your input. Did you learn today? And any other comments, if you want to put them in the chat, let me know if you guys learned today, if that made sense. I am always sitting there thinking, how can I explain this one more way to get it into your head? So the last thing I'm saying is going to bed anxious, not knowing if your company's doing well, making decisions blindly, no good. Don't do it. You can do numbers and have a better understanding of what's happening in your company. Lauren, back to you.
Thank you, Lori. That was awesome. You completely broke down the information. I am the first person to say that numbers aren't my friend and that I am not a mathematician, but no, this totally made sense. Aside from that, Lori, a ton of people have been asking for a template. So I just wanted you, I did respond to those people, but I wanted you to touch on that, on the fact that you don't create templates. You work one-on-one with clients to create their own form for them to use.
I do, and let me talk about that. First of all, in many ways, when people ask for a template, and with all respect, you're being lazy, okay? You can't be lazy in finance. You know, everybody wants this DIY template and you're going to stick numbers in it. It's going to tell you everything. So here's the disadvantages. Number one, even though companies have similar things, each company has its own situation. When I work one-on-one and I help somebody create a template, I'm creating the template by thinking, well, do you have many products you sell? Should we do a weighted average? Should we do a, just a basic average? Should we consider this product? So it's not like you just have a template that everybody can give you. In the small business world, they've been sold that you can get these templates, everybody punches in numbers and it gives you answers. You put it in your app and you throw in the business plan stuff and it gives you answers. I'm telling you guys, anybody who's has strong accounting, CFO like I do, finance, we laugh at that. That is not, it's like, say I want everybody right now who has ever not felt good to just download a template from their doctor and fill in what your symptoms are and don't go to the doctor. Would you do that? Would you do that, Lauren? You can never go to the doctor. You're just going to download a template and you're going to fill in your symptoms and you're going to be fine, right? You know, you could see it. It's very similar in business. It's the same thing. And so when I see people fill out templates, I have it all the time where they put in the inputs wrong, so they're getting the wrong answer. They input the data and I say, do you know what it means? No, I don't. At the end of the day, you ready for this? No one gets a successful stamp in business because they were able to fill out the template. You cannot go to the store and say, I'd like to buy a quart of milk with my template. You can only buy a quart of milk if you understand the meaning of the template and you know how to make decisions accordingly. What I care about, and I care about on the highest level, is that people know what decisions to make, what the results of the decisions will be, and how to change their approach if needed. A template won't do that. So if I give you a template, chances are you're not going to do anything with it. If you put in numbers and it's not your business model and you walk away with a belief that you should make this decision because the template told you and it wasn't the right decision, I can't live with that, guys. I'm all about reality. I am like the quintessential of the anti-small business advisor person. I am teaching you CFO skills for your small business to succeed. So I don't give templates. I will help you make one. I will help you learn, but I will never do harm. I come from the doctor's oath. I do not do harm. And so I won't give templates because I don't see people succeeding with a given template. But you have this, you can watch, you can go to my classes, you learn more, you can watch this again, you can make it, you can contact me to help you make it. I'm never leaving you stranded. So I'm being a tough love in saying, I'm not giving you something that could hurt you. I'm only going to ever do anything that can help you. Lauren, that was my speech.
No, I think that was great because, again, I'm responding, but I want people to have a deeper knowledge into why. Why can't you send me a template? And I think that you explained that beautifully. Thank you.
Thank you. Well, like I said, anybody throw into the chat if this helped you. I hope it did. It tells me whether to make more Ask Lori's like this. I always look to the audience to see what you enjoy, what you are clicking into. So I make sure that I offer the same things that you want. Now, like I said, I know this is something I'm always preaching to you, but I have to say as a last thing, I think we really have to hunker down because the next couple years are not going to be kind to small businesses, and knowing your numbers and having an understanding of what decisions will yield what results is of utmost importance. And that's why I am going over this again and again. And thank you to those, I see it in the chat, that are commenting that this really helped. I appreciate your input. I do. Everything I'm doing is to try to get you to understand how to run your business better. Okay, with that, Lauren, I will take off. I will see you guys next time. And till then, let me know if I can help you.
Thank you, Lori. Have a great day and a great remainder of the week. We'll see you next
Okay,
week.
bye-bye.
Bye. Bye, everyone. Thank you so much for joining us again today. Nearly 50 of you. We appreciate you always tuning in. Excuse me. We will see you next week on Wednesday at 10 a.m. Thanks. Have a great week. Bye.